Hello everyone. Today we will be discussing about the stock markets. What actually a stock market is and what are the various other things comes under stock market, and we will try to understand the whole concept. So let's start. So in the first slide you can see what is the stock market. So I have written down 2 points. These 2 points are the definitions and what are the other things about a stock market. So what's written in the first point is that the stock market refers to the collection of markets and exchanges where regular activities of buying, selling, and issuance of shares of publicly held companies takes place. So basically, stock market focuses on mainly buying of shares, selling of shares, and issuance of shares. These three point you should all remember. So this defines what actually a stock market is all about. So let us move on to the second slide. So in order to perform the stock market, you basically need that type of marketplace. So this marketplace is provided by the stock market. So here is the functions of a stock market. So now we will be discussing about what are the functions of a stock market, and so here we go. So the points are mentioned in the slide, that is fair dealing in security transactions, efficient price discovery, liquidity maintenance, security and validity of transactions, investor protection, support all eligible types of participant, and balance regulations. So I'm going to explain in a brief way all the points one by one. So let's go to the first point, that is fair dealing in securities transactions. Basically, the first function of a stock market actually explains about itself, that the stock exchange needs to ensure that all interested market participants have instant access to data for all buy and sell orders, thereby helping in the fair and transparent pricing of securities. And additionally, it should also perform efficient matching of appropriate buy and sell orders. The second point, that is efficient price discovery, it actually refers to the act of deciding the proper price of a security, and is usually performed by accessing market supply and demand and other factors associated with the transactions. The third point, that is liquidity maintenance. Usually, the stock market usually ensures that there is no problem of liquidity of any selling and buying of shares, and that is buying and ensures liquidity of buying and selling and other cash flow systems. The security and validity of transaction actually ensures that all participants are verified and remain compliant with the necessary rules and regulations, leaving no room for default by any of the parties. In this point, support all eligible types of participant. It actually includes the market makers, investors, traders, speculators, and hedgers. So they should ensure that all such participants are able to operate seamlessly, fulfilling the desired roles to ensure the market continues to operate efficiently. Another point, that is the investor protections. It says that the stock exchange must implement necessary measures to offer the necessary protection to such investors to shield them from financial loss and ensure customer trust. So, in balanced regulations, actually the listed companies are largely regulated, and the dealings are monitored by market regulators like Securities and Exchange Commission (CEC), SEC of the US. So in this slide, we are going to learn about the regulations of the stock market, how a stock market is regulated. So in order to regulate a stock market, you basically need an authority or institute. So these institutes are actually assigned with the task of regulating the stock market, and these are called the local financial regulators or the competent monetary authority. And in order to deal with the US stock markets, there is also a regulatory body charged with this activity. That is called SEC, whose full form is the Securities and Exchange Commission, who actually deals with the overseeing the US stock markets. And if you're going to talk about the other functions of SEC, that is the Securities and Exchange Commission, its mainly functions to be performed are of that is to protect the investors from any frauds, to maintain fair, then orderly and efficient markets, and usually to facilitate capital formations. So these are the basic tasks of the SEC. So the people who are actually involved in the stock markets, uh, along with the long-term investors and the short-term traders, there are also certain players which are also associated with the stock market, and whose roles are mainly dependent to run the market effectively. So let's start the stock market participants. The first one is stockbrokers. Stockbrokers are mainly the licensed professionals who buy and sell securities on behalf of investors. So these brokers actually are the intermediaries between the stock exchanges and the investors. They usually help the investors to do the buying and selling of stocks on their behalf. Then the portfolio managers, these are actually the professionals who invest portfolios or collection securities for clients. And like these managers gets recommendations from analysts and make buy or sell decisions for the portfolio. The third one is investment bankers. They actually represents the companies in various capacities, such as private companies that want to go to public via an IPO, or companies that are involved in pending mergers and acquisitions. Custodians actually are the RN is an institution who actually holds the securities of the customers for safekeeping, so as to minimize the risk of their theft or loss, and to also operate their exchanges of securities in sync with the exchange to transfer shares. And the market maker, they actually ensures sufficient liquidity in the market for a particular set of shares and profits from the difference between the bid and the ask price he quotes. So these are the functions of a market maker. So how the stock exchanges make money? So actually the primary source of income for these stock exchanges are they get the revenues from this transactions fee that are charged for each trade carried out on its platform. And additionally, exchanges earn revenue from the listing fee charged to companies during the IPO process and other follow-on offerings. And these exchanges may also offer privileged service like high frequency trading to larger clients like mutual funds and asset management companies, that is AMC, and money accordingly and earn money accordingly. So let's talk about the competitors of stock markets. So the as you can see, dark pools and blockchains, these are the two competitors of the stock exchanges. So what is dark pools? As you might be knowing that these are the private exchanges for securities trading, and these operate within a private groups, which actually poses a challenge to the public stock markets. And though their legal validity is subject to local regulations, they actually gain popularity as the participants. In case of blockchain ventures, due to many rise of crypto exchanges have emerged. So for such exchanges, these venues are there for trading cryptocurrencies and derivative associated with that asset class. So because of the rising of the crypto exchanges, the block chains or stock markets are usually are the venues for such trading. So the significance of the stock markets are that it allows companies to raise money by offering stock, shares, and corporate bonds. It lets common investors participate in the financial achievements of the companies, and in the long term, it also helps in capital formation and economic growth for the country. So these were all about the basics of the stock market.